Good afternoon, everybody. Today is Monday, the 19th of September, 2011. This is Brian Shannon speaking. Let's take a look at this market here. Always interesting. And today, because it's Monday, this video is brought to you by Realtick. Check them out at realtick.com. The trading platform that I use to analyze here these charts. That is Realtick, and what I trade on as well. But this market, again, it's been very interesting and a lot of good action, intraday. Today we saw of course, a gap lower, and that market that sold off, the SPY that is, down to the rising 5-day moving average, bounced from it once, pulled back to that 5-day moving average again, then kind of crawled up along it. Today, the afternoon rumor of some Greece news breaking right here really brought the market back up. But for the day, the S&P 500, the spider that is, was down just about 1%. But it didn't feel as much like a down day today because, as someone in my chat room had pointed out, it seemed like a lot of the stocks actually followed through and did what they were supposed to do. Maybe we're just looking at the right stocks, or maybe that was actually the case. But there were some real nice winners among stocks that really took off from nice bases. Stocks like CMG that just blasted past that 318 and continued to move higher. Las Vegas Sands is starting to show some strength here and breaking out, looking really like it has some potential on that weekly chart as well. And Wynn Casinos, Wynn Resorts, I guess it's called, also had a great day. And we're also looking at Starbucks, which broke past some resistance and really just nice clean movement higher here for a change. So the market is continuing to give us opportunities if you're in the right place, and that's the way it's always going to be anyway. But overall, this daily chart of the SPY has been pretty neutral here, with a lot of big volatility. Taking a look at the 30-minute time frame again, we got down to this important level where we've been kind of observing this about 118 and a half, that this level has been kind of pivotal and really kind of the midpoint for this range that the S&P 500 has been in. But it found support in there. So the rest of this week going forward, today's lows I think are going to be very important, that we continue to hold above those. Then maybe we can kind of continue to recover and head up towards that 50-day moving average, and maybe go on to test the highs of this recovery so far, up near about 123 and a half. The Nasdaq was up 2 pennies today, and again, you've got stocks like Apple and Amazon that are at all-time highs. Let's take a look at Apple. Apple up at all-time highs, Amazon at all-time highs. It continues to, the Nasdaq that is, continues to be the leading index, but it's still kind of questionable what's happening in here with this market up at this cluster of moving averages, and then right in there where we've got a 50, 100, 150, and 200-day moving average that we're looking at, and we've got this prior support that we were observing from July that is maybe acting as resistance here. It's tough to call it resistance, but we gapped lower, made a series of higher highs and higher lows. So same thing in here, is that this market is the Nasdaq that is going to, the lows that we've seen today should be important for the rest of this week, and near that 55 level. That's the level that we had kind of broken out from, and this little range in here so far is looking like good. The key level of support. So 55 and a quarter maybe is what we want to mark as an important level. If we get back below that this week, then we want to get a little bit more defensive. But on that daily chart, we came down. We're holding above the 50-day moving average, and it is encouraging. The Russell 2000 was down 1.7%, and it came right down to the 10 and 20-day moving average. And I should point out, I guess I did, that the S&P 500 was also came right into that 10 and 20-day moving average and found support. The Russell 2000, though, it gapped lower. It wasn't quite as strong as a recovery or quite as convincing. Really a lot choppier. Saw some real nice spikes in here, but the first one didn't hold, and the second one was showing again in the afternoon that there are still sellers around in the Russell 2000 as well, and they were basically found up at the support from Friday, that is that this prior support kind of holding as resistance, and 71 to about 71 and a quarter is the level that we want to see this market kind of get back above and hold above. It is encouraging to see the rising 5-day moving average, and we want to see same thing in this market, that we want to see the lows from today hold for the rest of this week. The semiconductors are holding up well. I was thinking that we'll probably, and I still do think that we'll probably see this market pull back down towards the $30 level at some point, maybe this week. If we, this will be an important level, $30.27. If we lose that, even a move back down towards the prior important level of 29 and a half, and that's really kind of the range, was 29 and a half to 30. If that holds as support, then these semiconductors can continue to just kind of go sideways and rebuild, a base that maybe we're not going to see another leg lower from, but still very difficult to trust with the declining 50-day moving average. The financials, they were down 2.7%, still within this range that of course isn't going to change anytime soon. 12 to 13 and a half, declining 50-day moving average, and just an ugly mess overall. We were back below that last week. We were observing $12.60, and we're back below that. That seems to be resistance here late in the day. So really still a mixed picture amongst all these markets. And again, it seems like the leaders are really outperforming on the upside, and the stocks that have been doing poorly, stocks like Netflix, just continue to get smashed down another 11 points today.